Right guys, welcome back to another YouTube video. Today is going to be the second lesson in the series on concepts I use. So the first lesson was on time frame alignment. Now we're going to be going over internal and external range liquidity pools. So this is one of the main concepts I've used for the past 3 years, and it's single-handedly, I would say, turned me profitable, just simplifying price and viewing it through the range of internal and external. Right, so this is going to be explaining what internal and external is, and then I'll show you a couple diagrams on how to spot it. So in short, internal range liquidity pool is a fair value gap, if any of you know what that is, on imbalance in the market, right? So normally when price comes into an internal range liquidity pool, I look for it to go to external, vice versa, right? So when we sweep an external range low, I look for it to go to the internal, and then that works as the drawn liquidity, okay? So as I said, internal is an FVG, which I'll show you what it looks like on the chart a bit later, and then external is defined as swing highs and swing lows. So you're always going to be trying to target one. You can go from external to external or internal to internal, but my rule of thumb is when it comes to this, I like to use the most recent information. So say we've come into a daily SIBI and we're moving from a daily BISI, I would use the daily SIBI first and use the intermediate time frame structure to make sure the bias is correct. So once you view the market in this way, you understand that the market is only going to be ever doing two things. Okay, it's either running old highs or old lows, or it's rebalancing imbalances, and that goes on all time frames, even the monthly, the yearly, the weekly, the daily, even the 1 minute, right? The market is always doing that. Right, so this is just a quick diagram of what it would be like in a bullish and a bearish trend, right? So those internal range liquidity pools in a bullish trend should support price higher, yes? And those swing highs, the external range, should get broken through in a bullish trend, right? We should see old highs getting ran through and old lows being swept and respected, okay? And then vice versa on a bearish trend, right? So say this is the daily time frame and we're in a bearish trend on the Nasdaq, right? And we're coming into an internal range liquidity pool, and even better if there's SMT, I'm even more confident, right? So if there's SMT on the high time frame inside of the internal range liquidity pool, and then on the 1 hour, for example, if we're going from the daily to the 1 hour, then on the 1 hour, if there is a change in state delivery, then I'm very confident that all I need to do is look for a POI to go lower during my kill zone, that is. So as you can see in a bearish trend, right, we're inside of internal range liquidity pools. We're going to be breaking through old lows, and we want to see old highs and bearish PDRAs being respected to push price lower in line with the trend, right? This is the last example on the PowerPoint slide, and then we'll get into the real trading view slides. So as you can see here, right, on the left in the bullish example, we're clearly in a higher time frame uptrend, right? So this is going to be the daily time frame, I believe it was. It's on the 29th of the 5th, 2025. So we come into this internal range liquidity pool on the daily, and that would be our bias, okay? So we're looking for price to go internal to external. So basically all the way from when we tap into that daily internal range liquidity pool, I'm looking for price to take out the external. So my bias all the way from that internal to external will be bullish, okay? And I'll look for the intermediate time frame PDRAs, the bullish PDRAs to support price higher, and I'll look for the bearish PDRAs to fail. Vice versa, on the bearish example, you can clearly see that we're in a bearish downtrend, right? This is the 4 hour, right? We come into a 4 hour range liquidity pool and we want to go lower, okay? So we've got 4 hour internal, now we're looking for 4 hour external. So on the 15 minute and the 1 minute, we can look to frame our entries, and we should expect bearish PDRAs to push us lower, right? But yeah, let's get into this. Right, so this is going to be our first example, okay? So this is the daily on the Nasdaq, and it was during the 2nd of Jan 2026, so it was around 3 weeks ago from now. And I actually sent this in my premium Discord for my premium members, so this would have been my daily bias for the day, and then that means I would have been looking for longs for the rest of the day. So if you all watched my time frame alignment video, you'll understand that if we're on the daily for our bias, we should go to the 1 hour for our intermediate time frame, so for our structure and for our POIs, right? So here on the daily, we start to find supports. This would have given me a bias. So say after Friday, Monday, I'd have had a bullish bias. Tuesday and then Wednesday, our drawn liquidity is hit. So that would have been a bias or a drawn liquidity for the whole 3 days, okay? So even if we refine this down to the 1 hour, right, you can see here that the bearish PDRAs, like this inverse fair value gaps, gets created. You can see that the bears are no longer in the control, because once we come into this daily key level, we clearly see the market maker buy model. You see the sell side, you see the buy side, right? So you clearly see the market maker buy model start to play. Okay, so this is just many examples of it on the intraday time frame. So on this time frame, you can look to frame entries, say off here, of any PDRAs that fits your entry function. Right, so this is pound yen on the monthly chart. So this would have been your bias, right, for the whole month. Okay, so we come into this monthly external range liquidity pool. Naturally, I'm looking for longs, right? I want longs back up to this monthly internal range liquidity pool. Okay. And also, this looks like on the daily, it will look like relative equal lows. So what we do here is we drop down to the daily. Following our time frame alignment, if you watch that video, you would know that I would want to see bullish PDRAs start to be respected, okay? So we have this unmitigated order block here, which ran these relative equal lows, which is the monthly external range. So I would look for price to either respect this and go higher to the monthly internal range, or okay, we'll just go and this will be the structure change. So let's see what happens. This will be your daily bias, okay? So you'd still be wanting longs. The monthly is still showing long. We have some harsh retracement here, right? We have this harsh retracement. And then you start to see that we start to respecting bullish PDRAs. We're sweeping lows, running out old highs, displacing through old highs, right? So now you can see that the draw would naturally be this monthly SIBI, right? I hope that all makes sense, guys. And remember, if you want to get mentored by me, then I do have a 7-day free trial where I go over all of this in a lot more detail and you can ask me a lot of questions. I trade like this every single day inside of the Discord. And then on Tuesday and Thursday, I trade on TikTok for free. But remember, if you enjoyed this video and you found it helpful, remember to like, comment and subscribe. And if you've got any other videos you want me to make on my model, then feel free to put them in down below. But I've got an idea to do one on SMT next, so that'll be coming up soon.